I think people need to understand that the vice president has always been a part of this process. He was part of key meetings with the president when decisions were taken in the early stages. I have always briefed him totally, and he's totally in the picture. And my conviction is that he's been totally and strongly in support of this process, and he will continue with it exactly the way the president has done so far.
No anticipation then of any challenges coming to the fore, because undoubtedly you've heard market chatter suggesting that you may not have the same support from acting President Goodluck Jonathan compared to that which you've received from President Umaru Yar'Adua.
It's really a lot of wishful thinking and people who don't understand the vice president. I think those who think he's going to be soft on corruption are going to be very, very surprised. I think they're going to find that he's as committed to the struggle as the president was, and that he's going to be solidly behind this process. I have no doubt in my mind that there's going to be a lot of surprise for many people.
Well, there's a rumor out there at the moment that a cabinet-level committee has been set up and chaired by the Minister of National Planning in the country, Shamsuddin Usman. It's set up to review the CBN Act, considering that the Act was only reviewed and a new one enacted in 2007. Is this true? And if so, why now?
No, I'm not aware that there's any review of the CBN Act going on. I do believe that usually it's normal when things like this happen. You might have some political interference in work. The CBN is an autonomous entity of government. We have acted purely and totally within the bounds of the law. I will continue to defend the independence and autonomy of the central bank. I don't think there's any matter of concern on that.
So given that political picture that we've just painted, let's look at the formation of the asset management company. It was scheduled to come online, hoped to come online by December last year. What's the status in that regard?
Well, we've already had a successful public hearing at the House of Representatives. The final report of the public hearing is being prepared, and we should be ready to go. The House committee should be ready to table it before the House by next week. We are dealing with a few issues, largely trying to minimize the timelines. The process is that the House would approve and transmit to the Senate, and will look for Senate concurrence. But then if there's an amendment to the Senate, then they've got to come back and harmonize. What we're trying to do now is use next week to see if we can get any issues out of the Senate and harmonize a bill so that we can smoothen the approval. Our own estimation is that we will get the AMC bill approved this month.
Is an AMC the way to go here? I mean, it's fully owned and operated by government. The question being asked is it the best route to be taking, given the checkered history of government-owned entities in Nigeria? And some are asking, why not give portions of that proposed portfolio to Nigerian private sector fund managers to manage instead?
Well, that's how the AMC will operate, Alicia. The bill is very clear. The AMC will take over the assets, but the AMC will farm out those assets to private operators. Some will manage the quoted securities, some will manage the real estate assets, and maximize the value and minimize the cost to the Nigerian taxpayer. We don't envisage that the AMC will be one large company managing ₦1 trillion of loans and 500 billion naira worth of assets. It will basically be a small, lean structure that will manage the loans, monitor the performance of asset managers, set criteria, set out strategies, and ensure that the assets are well managed. But it's not going to do it itself.
Of course, Governor, we are exploring different scenarios here today. So on that note, is there a plan B if the asset management company does not materialize?
Well, the plan B has always been there. These banks are technically insolvent, and we're left with no option but to either hand them over to NDIC or to nationalize them, since the capital market isn't deep enough. But I don't think there's need for a plan B. At this moment, everything we've heard from the executive and the legislature says that the AMC bill will pass. There has been no fundamental objection in principle. I think everybody understands that the AMC is a win-win situation for everybody. We've right now protected depositors, and nobody has lost any money. We are trying to protect shareholders and make sure that they are able to retain some value in their companies, so the companies are not liquidated. We're getting the support of the shareholders. We've gotten the support of the non-executive directors. We're making progress. There has been strong expression of interest in the banks from local and international banks. The AMC is just one more item in the furniture, as it were. So it's taken for granted. I think the MC will pass.
Well, of course, we've gone through the audit of these banks, CEOs being sacked last year, increased disclosure as far as requirements and tenure limits are concerned being set as well. What next for the reform process here? Because many are asking, should we be anticipating any other shock announcements? And if that is the case, what better platform than to do it right here and right now?
Well, I do hope there will be no shock announcements, and I do hope I was always clear from the first day I became governor of what I was going to do. We're looking at the root causes of what happened. Some of the problems obviously go beyond the banking system. One of the things we've got to look at is the importance of the wider macroeconomic reforms. Financial reform and financial growth cannot deliver the solution to Nigeria. To be a very lazy approach. We've got to fast-track things like the power reform. We've got to have a clear policy on small and medium enterprises. We've got to look at our agricultural program. The major problem has been, apart from governance, that the banks built up a lot of capital, a lot of liquidity, but there was no outlet in the real economy. So part of what we're doing in the central bank is working with the Ministries of Power, working with Ministries of Work and Ministry of Finance to see how we can fast-track these reforms. I just had a meeting this week with the Bureau for Public Enterprises, and we talked about how we can fast-track the concessioning of the transmission company, how we can fast-track the concessioning of distribution companies, and how the central bank can assist in advocacy for that. The second aspect of the reform is that we have a one-size-fits-all policy. Every bank is an international bank. Every bank is a universal bank. We've got to look at the structure of the banks. Some banks can be international banks. Some banks should be national. Some banks can be regional. Some banks can be specialized banks. And they should have different capital requirements. Finally, we've got to look at the whole universal banking model. I'm a very strong believer in separating commercial from investment banking. I don't think banks should take depositors' funds and do prop trading. I don't think they should take depositors' funds for private equity and venture capital. And we're going to come up with guidelines to make sure that depositors' funds are depositors' funds and they're kept safely, and that banks who want to do prop trading or private equity raise funds from people who consciously are willing to take those kinds of risks.
So what we are looking at is the possibility then of some kind of local version of the glass segal coming to the fore in Nigeria, splitting commercial from investment banking, right?
Yes, and probably creating a new holding company structure so that banks, if they want to take that kind of risk, can take the risk with their capital and not with depositors' funds. And we also need to have guidelines for things like margin lending. We didn't have any regulations around that. We will not stop that completely, but there will be questions. Should banking stock be marginable, for example? And what percentage of the loan book can go into margins? And should banks require special certification before they do margin lending? And what kind of requirements do they have to meet before they do that? Well, we've got to look at all of that.
Let's take a look then at the potential sale of distressed banks. I mean, as you mentioned earlier, we are seeing interest from local domestic banks and then international banks as well. They've submitted their letters of interest for acquisitions of stakes in these distressed banks. Yet we've seen nothing concrete really emerge and come to the fore. To what extent is this suggestive of people just holding back for some clarity? What exactly is holding up processes right now?
Well, it's really in our hands, isn't it? Part of what we want to do is make sure we have the AMC bill approved, because dealing with the toxic assets and bringing some capital to the balance sheet of the banks is an integral part of this process. These banks have big holes. We can't expect anybody who's going to merge with them to absorb that hole. And if we sold them as they were, we'd have to sell them for a nominal value and the shareholders would lose everything. So what we're trying to do is get the AMC bill, deal with the toxic assets, if necessary, have the ability to recapitalize the banks up to a point that's acceptable to a potential investor, and then negotiate the transaction. The process has been ongoing. We've done technical due diligence. What we've done is to ask everyone to express an interest in 3 banks in order of preference. The central bank's principal interest is not so much who can bring in money, but who, in addition to money, can bring in governance so that the banks don't go back. Because at the heart of this problem has been governance and risk management and controls. So we're doing a technical due diligence process, selecting partners that we think are acceptable to the central bank, and then we would allow the shareholders and depositors to negotiate